All right, what's up, guys? So today we have Jack McColl, one of the biggest names I personally know in the business credit world, and we're going to do something a little different. This is going to be a podcast, but also a demo on how you can use business credit to buy your first, second, or even third co-living property. So this is to supplement what we are teaching inside of Sub 2 right now about co-living. This goes hand in hand with the first module of buying the existing pad splits, because in all our experience, it's the easiest way to get started. And so, Jack, I know you just recently started. Actually, it's been a couple years in your real estate career. Like, what are you focused on? I know you're buying Airbnbs, Section 8, maybe. What else? Like, what are you up to?
Yeah, what's up, Dustin? Great to see you. Great to be here with you today. Appreciate you having me on. Yeah, I really got into real estate where I was actually purchasing properties last year. 3 years ago, I got into my first fix and flip, and I used business credit to get into that fix and flip, but as a money partner. And on a previous deal, maybe 3 years ago now, I was just basically a hard money lender. So that was my first exposure into real estate as a lender. And then the second one was the money partner, the gap investor on a fix and flip. And then the third deal I did was actually buying my first rental property, and I bought it as an Airbnb, and I used business credit to facilitate the down payment and some of the renovations. Well, actually, less so of the renovations, more so of just furnishing it. And then now it's making me about a 20% cash on cash return this year. So it's going pretty good so far.
Nice. And if I remember correctly, you really love the bonus depreciation
Oh, that was a
taxes, right?
huge incentive. I'll probably get one, maybe two more rental properties this year so I can get that bonus depreciation. I'm not a real estate professional, but you can kind of qualify for one if you do the short-term rental loophole, they call it. And so I think it's the easiest way for someone making a good bit of money to get very big deductions on their tax return to offset their active income. So I don't particularly want to buy a couple more. I don't want to get some more or I want to get a multifamily deal and some other type of investing. But I do want to get these big tax deductions, and it's the easiest way to get these deductions if you rent them on Airbnb and some other qualifications. So I'll probably get two more.
Love it. So anyone that's watching this, doesn't matter if you want to buy co-living. Really, any of this can be applied towards buying an Airbnb. Whether you're a real estate professional or, like Jack said, you can just use the bonus depreciation on other sources of active income. But again, this is going to be a demo case study. I'm going to start screen sharing here in a minute, and we're just going to walk through it. Like, hey, starting from zero, starting from scratch, like, what is the very first step to setting up the LLC, the bank accounts, a couple net 30s, looking at a property, and really just a 90-day game plan. Right. So to start, Jack, I know you're a fan of PCS. I use PCS to open my LLCs. What do you like about them? Like, why do you choose them out of anyone?
Yeah, so Prime Corporate Services, I think they're an amazing company. I know the founder is a friend of mine, Steve. Really great guy, great team, and they do a great job on facilitating the filings of the LLCs in any state you want to. They really make it easy, especially if it's your first time doing it. They make sure it's done right. I do think they're a really good company to help with those LLCs. It's pretty low cost, and they just make it very, very easy. So, yeah, I work with PCS. I think they're also a great company for tax strategy and tax preparation as well. So to get the LLC filed, I do think working with PCS is a phenomenal idea.
Perfect. And to clarify to anyone watching, the reason Jack is here, in addition to a couple other reasons, he's who I've learned pretty much everything about business credit through. This house I live in, I fronted with business credit and then paid it back when I had a loan come in. Another property that we have near Disney, I bought with business credit and then we used the cash flow to just pay all that down. And so I wanted to bring him in, and we're fortunate to have him here to just talk about how we can really take that property or portfolio to the next level, safely, strategically with business credit.
Yeah, and if I can just
Right.
jump in there really quick, Dustin, I have found that getting access to capital is the easiest way to do that is to do it through business credit. You can get between $50,000 and $250,000 at 0% interest for 12 to 18 months, with no proof of income, no collateral, no tax returns, no bank statements. If you have those things, it can help, but it's certainly not necessary. The most important thing is to build a strong personal credit profile and build strategic bank relationships. And if you understand that framework and you do things correctly, it then becomes very easy to get approved for $50,000 cards, $75,000 cards, in addition to business lines of credit. With business lines of credit, they do come with interest, about 10%, and your business does need to be at least 2 years old, but you can get certain business lines of credit without showing any bank statements or tax returns. We have a couple really awesome lenders who do no doc business lines of credit. So if you have access to an extra $100,000 on a business line of credit that you can pull from anytime you want, and when you pull from it, you pay the 10% or so interest, it's very, very valuable to have. Then you have that in addition to business credit cards that come with 0% interest for the first 12 to 18 months. Those two credit products are very, very powerful.
Yeah, I mean, speaking of which, I think it was 3 weeks ago your team helped me get a $50,000 0% business credit card. Soft, no hard pull, just a soft pull. And yeah, it was through those relationships you just mentioned.
Love to see.
All right, so I'm gonna pull up screen share. We're just gonna recap on these sources, and then we're gonna dive into the first property. All right, so let's see right here. This first one, and do it's full screen. All right, so all these links will be in the description. But to start, this is what we mentioned to set up the LLC, Prime Corporate Services. Typically like 2, maybe 3 weeks. Get your LLC fired up quick. Jack, in your opinion, what is the next best step? My guess is maybe net 30s, or am I jumping the gun? Is it setting up a checking account with Chase, or what do you think?
After the LLC is created,
Hmm.
so at one point, we'll need to make sure that the personal credit profile is as optimized as possible. That would be something we want to do simultaneously to all these steps. Things like making sure you have high enough collective personal credit limits, making sure you're paying each of the balances down on the revolving accounts to under 30%, making sure you have at least one tier one personal credit card. Tier one is a bank like Chase, Wells Fargo, Citibank, or Bank of America. They want to see a tier one account on your profile. So you can do that simultaneously to these steps. But in terms of, yes, get the LLC filed with Prime Corporate Services. And then next, you could get some net 30 accounts reporting to your business credit profiles. It's not a requirement. The personal credit profile is the most important thing. But when you can additionally get a business credit score, it makes it much easier. So a few ones off the top of my head, you can go to nav.com and pay for their premium, which I think is about just 40 or $50 a month. You can get the nav.com Prime subscription plus their card. So that's 2 trade lines that will report to Experian Small Business and Dun & Bradstreet. Another one you can do is called eCredable. eCredable.com. You can pay for a $20 subscription, and then it's going to report that subscription to your business credit bureaus. And once you have 3 trade lines reporting to Dun & Bradstreet, a business credit bureau, and Experian Small Business, then you're going to get a score on each of those credit bureaus, which makes your whole profile in general look more attractive. The third one you could do, it's called Fair Figure, Fair Value. I think it's called Fair Figure. It's another subscription for about $25 a month, and you only have to do these subscriptions for only 1 month because it generally reports in the first month. So that gives you 3 to 4 trade lines in the first month, and now you have an 80 plus score on these business credit bureaus, which makes your whole profile look more attractive. Then the step after that, or you could do it simultaneously, is go open up some strategic bank accounts. So the question I would first ask is, if the business is cash flowing, the most important bank to show the cash flow is Bank of America. But again, we've been talking about you can do this with no proof of income, no revenue, et cetera. If that's the case, then opening a business checking account at Chase Bank and Wells Fargo Bank would be highly recommended. At Chase Bank, you will always want to have a business checking account. Wells Fargo, it helps as well. And if you have revenue, then also do a bank account at Bank of America and show Bank of America that revenue. But again, if you don't have revenue yet, it's just totally fine. Just focus on opening a business checking account at Chase Bank and Wells Fargo Bank. And if you could park a few grand in each of those accounts at Chase Bank and Wells Fargo, that would be very, very helpful. Like at least you want to have 2 grand if you can, at least 2 grand in each of those accounts. I would prioritize funding the Chase account first, and then the plan B or the second tier would be the Wells Fargo account. So those are kind of the steps I would go in so far.
Okay, perfect, perfect. Yeah, so let's say you've already done all these. Maybe you already have LLC, costs a couple $100 set up, a couple net 30s already. And let's say you've been with Chase a while or one of the other banks Jack mentioned, and you're ready. Like now what? So I took a couple minutes before we jumped on to pull up a property, a sample property, and we're going to talk about some of the quick rules of thumb. Back of the napkin math. I've looked at hundreds and hundreds of co-living deals, and I've just found a couple quick things that'll help you just save a ton of time. So the first one, this is padsplit.com. You can set up a free account. I'll put a link in the description. And basically, you can see existing pad splits for sale. So there's the resources tab, and then it's hosting tools, PadSplit Marketplace. I'm going to just keep this here. If you have a question on how to find this, just shoot me a DM. But the first rule of thumb, and this is just my opinion, purchase price compared to the revenue. If the revenue, which we could see through PadSplit, this isn't fabricated by the hosts or owner. All of it's ran through PadSplit, which is nice because you could trust it more. We typically want to see at least 2% revenue of the purchase price, or the 2% rule, like bigger pockets. So what that means is purchase price 275. So 1% of that, basically $2,700 a month. So 2%, about $5,500 a month of revenue for us to even like seriously look at this. This is above. The average is, the past handful of months, about over 6K. And so the dips and the peaks and highs, it could be a variety of things, quality of the owner, quality of management, seasonality. And so if you do like it, just the area in general, and you want to dig more into it, immediately connect with that PadSplit rep. But I wanted to throw that out in the beginning because that way you don't spend all this time underwriting and like, oh, is it a deal? I don't know. I'd say 99% of the time, at least on these co-living, if it's not at least the 2% rule or higher on a monthly basis, it's really not worth looking at. And so
And so,
this one
Dustin,
does.
just to confirm, these
Mhm.
are coming furnished, and they're pretty turnkey, or are they completely turnkey?
Yeah, they are 100% turnkey. People are living in them right now. And so it's pretty amazing because, they all have different, I guess, ways they're ran. Most of them are going to have a property manager. So it's like truly turnkey, like a pretty ribbon on it. They'll all have little like maintenance things probably that you need to take care of. But yeah, fully furnished, all the systems set up, like all the utilities, all the people in it, and you're just transferring ownership. And so, in my opinion, this, we'd have to run an inspection. Like, you'd want to make sure insurance is going to cover this because sometimes when it transfers ownership, new rules and policies with ownership with insurance, they may be grandfathered in with the current host, but when it transfers, they may want some things, fixed depending on roof age, stuff like that. So, yeah, I want to show a couple pictures, but yeah, this one, it's a solid candidate. It's one at least worth digging more into. And they don't have a ton of pictures, but 9 beds, 3 baths. And then when you do work with your rep, your PadSplit rep, they'll be able to show you a lot more data, more photos. And so again, just free account at PadSplit and you could dig in. I'm gonna actually step back out of this property. You could see they have properties like this all over. Georgia is a big area, Texas, Florida, Vegas, Arizona, Tennessee. So there's properties all over Utah, West Valley. I know, Jack, you're buying Utah, right?
Yeah, exactly.
Yeah. And so the 2% rule, it is my own opinion, especially using business credit, but use it with your own judgment. All right. So we have the LLC, we have our net 30s. Now we're on the hunt. We've already set up a checking account. Jack, from a business credit lens, is there anything else they should be doing during this time period? Like they're underwriting deals every day. Is there anything additional they could do besides parking that cash, or this is really it? They just need to be on the hunt.
Yeah, I mean that's all really good things, and maybe I'll just go into a little bit more detail on how to optimize that personal credit profile. I mentioned a couple things. We talked about, the LLC, the bank account, the net 30s, et cetera. Those are all really good things. Parking some cash in there, letting that money season in the business checking accounts. But just to add a little bit more detail on optimizing that personal credit profile, you'll definitely want to have scores at least 720 across all three bureaus, ideally 750 on all three. If you have any late payments that are within 2 years, you might want to find a credit repair company to help get those removed. I have one if anyone needs that help. Any collections, things like that are bogging your score down. If that is you, it's going to be something you want to take care of first. You can get any late payments removed, any collections, any negative things you can get removed from your profile through the right disputing tactics. So that's number one. Number two is going to be paying down your balances on revolving, like personal credit card accounts and personal lines of credit, down to under 30%, ideally under 10%. So start to strive towards that. If you have balances that are maxed out that you can't pay down, that's going to be a setback right there. So really focus on bringing each of your revolving balances to under 30%, at least under 50%. But like really, you need to be under 30% for the best results. After that, you want to look at how many hard inquiries you have in the last 6 months. I never like to see more than 2 hard inquiries in the last 6 months on each of the three bureaus. Again, there are ways to dispute hard inquiries and get them removed from your profile. So if you look at your profile and you see 10 hard inquiries on Experian in the last 6 months, that's going to be a bit high, and it would be very difficult to get approved for a new credit account that pulls from Experian. So again, if you need help getting those hard inquiries removed, if you don't know how to do it, there are credit repair companies that can help get those removed. After that, you want to look at your collective personal credit limits, as I mentioned before. So if you add up all of your credit limits on personal credit cards, you at least want that to be minimum $15,000 or more. I see the optimal range of collective personal credit limits, all added together, is between 40,000 and 80,000. Okay, so if you're still at like 10,000 collective, you would want to then apply for a high limit personal credit card. A few that come to mind is like the Chase Freedom Unlimited is a high limit personal credit card. The Built credit card, which you can pay rent on, which is a really good card issued by Wells Fargo. Both of those cards are tier one accounts, which look really good on your profile. Another one would be a card from Citi, like the Citi Strata Elite card, or any of the Citi Strata cards. So those are cards that I see that give high limits. So you can get that personal credit card for the purpose of getting a tier one account reporting on your credit and increasing your collective personal credit limits. But what you don't want to do is apply for too many personal credit cards too quickly. You do not want to have more than two open personal credit cards in the last 6 months, like one or two, but certainly not three or four. Okay. So at that point, we're looking pretty good. Payment history is cleaned up. Our balances are paid down. Our hard inquiries are either low or they're removed. So now they're low. Now we're looking at making sure we have a tier one personal credit card. We're looking at the collective personal credit limits. If you need to get a personal credit card, get it. And then that's going to take 30 days to report. At that point, we're looking pretty good. We want to look at the average age of the profile. If the average age of your credit profile is less than 2 years, you'll want to get added as an authorized user to someone else's card that has maybe 5 or 10 years of age. That's going to increase your average age. And I think at that point, we're looking pretty good. We can go a little bit deeper, but that's a pretty good optimization right there. So if your credit profile is optimized, 750 score, and you just did everything that I just kind of outlined, you have the LLC, you get those three net 30 accounts, you get the business checking accounts that I mentioned, and you park some money in those two business checking accounts, at least Chase and Wells Fargo. Then you're in a really good position.
Wow. So before we move on to the next step, I just want to say anyone that wants to learn directly from Jack, we're going to have a link in the description so you can go straight to his community. This, as you can see, there's an entire science to business credit. The more you keep digging in, like basically that's the tip of the iceberg.
Yeah.
He goes into much deeper, especially on the business credit side. So we'll have that in the description for you.
Yeah, and to
So,
follow up really quick there, Dustin, like in addition to that, that's how we optimize. But then when it comes down to the applications for these business credit accounts, there's a different strategy that you need to follow on a pretty much a per card and a per bank basis to maximize your results on a per card basis. Like the strategies
mhm.
we have at applying at Wells Fargo are different than Chase, and that's different than Truist Bank if you're on the East Coast and have access to Truist. The strategy for Citizens Bank for their business credit products is a little bit different, and KeyBank is different as well. And really, Bank of America is different as well. So it is pretty interesting because each bank has a different strategy. And I only know these different strategies because I've been teaching over 3,000 people for the last 5 years now. And so it does get quite complex. But I do have many different YouTube podcast interviews and speaking engagements on my YouTube channel. If you search my name, Jack McColl, I go into much more detail on a lot of these strategies.
Yeah, that new doc that you have in the program is amazing.
Oh, the business credit application guide, that is the most powerful resource that we have for sure. It basically breaks
Hmm.
down what to do before every bank, what cards to apply for, and exactly how to complete those applications. And whether you do it through a bank or online application or a phone application. But yeah, that resource is incredible.
Yeah, absolutely. All right, so let's say everything that Jack said, you're in the clear. You hit all those boxes. Well, what's the next step? We got to figure out your long-term debt. So the best way that I know of to buy these, ideally you're buying it sub 2, you don't have to get new debt, which is possible. Um, but the more likely that you're going to experience is buying with a DSCR. And I'm going to screen share real quick. So a DSCR mortgage, it is highly investor friendly because you're not using tax returns, like none of that stuff. You're not showing income statements. And it stands for debt service coverage ratio. So all that means is they want to see that the income that's coming in for the property can pay for itself, the mortgage, the PITI, so principal, interest, taxes, insurance. And at least currently for co-living, they're not using data from like PadSplit the way Airbnb uses AirDNA. It is on the horizon. We have someone on our team that is always talking with new lenders, brokers. It should be happening, in my opinion, right within the next 12 months. So they're going to want to see the long-term rent, even though you're not even using it for, a long-term rental, a 12-month regular rental. They want to see that it'll at least pay for itself. So a 1.0 ratio. And so I'll have in the description again, we're going to have resources to lenders we've literally bought deals with before, and just to help expedite that. One of the common questions, and this is why you want to work with lenders that have bought these, it's the seasoning. A lot of DSCR lenders, they're gonna want 3 months, if not 6 months, of the down payment money in the checking account first. We've done it without it. We've bought 2 to 3 properties where the money only seasoned in the brand new checking account for 10 days. And so we'll have those contacts for you just below. All right, the next big thing I want to show, let's say you found the property you like, you confirmed it with the rep that at least everything in your criteria has a green light. We have the DSCR. Ideally, you're going to want a 720 credit score or higher. I want to show one thing for underwriting, and then we're going to dive deep into the next steps from the business credit. All right, so this calculator I'm about to show, it's just back of the napkin, but it'll give you a pretty good framework of if you got a decent deal or not. Those that are in sub 2, this is the pre-calculator that you get access to. Anyone else, just shoot me a DM. All right, so on the left, we're just going to zoom in. This is that exact property we were looking at. It starts with the income, the revenue. So we have 9 bedrooms, 155 per week, and that's how we're getting this total income right here, about $6,000 a month. And then I did pull up let's see, a mortgage calculator, and it's showing how we're getting this PITI, so what the monthly mortgage payment is. Anyone can access this calc right here. It's a bank rate mortgage calculator show. It's showing almost $1,700 a month. The two things that you'll want to confirm with your PadSplit rep are the estimated taxes and insurance. We're always super transparent when buying co-living properties with the insurance. We're not trying to play any games with them because if you tell them it's a regular rental and the house catches on fire, well, they couldn't deny coverage. And then, yeah, that you just don't even want to go down that road. So next, again, confirm these estimates with your rep, but these are based on averages. After subtracting the monthly mortgage, we want to take out water, electric, internet. Typically, on average, we're seeing that's 12%. Again, this is just an average, confirm this. We always account for vacancy, at least 10%. There's going to be people moving in and out for whatever reasons. Every month, we are setting aside reserves for maintenance. Actually, we do front load reserves when we raise capital to buy these, about 20 grand. And lastly, PadSplit does take a fee. You are using their platform. They're filling it with tenants for you. And then we always use a property manager. Um, in my opinion, it's not worth skipping and trying to manage this yourself. Actually, that's a big reason why people sell pad splits is because it's the fast track side landlord. All right, Jack,
Can you
anything
repeat that
come?
actually, Dustin? Why are most people selling pad splits?
The top two reasons I've seen, number one, they try to manage it themselves to save 500 bucks a month, and
Hmm.
they don't realize what they're getting into, and they're like, after 12 months, they're like, I can't do this anymore. You're getting you're getting DMs about someone, stole my food out of the fridge, or so and so didn't clean their dishes. And you have two or three properties like that. Next thing you know, you're like, all right, I want out. I'm done.
Hmm.
So
Okay.
that's the top reason we see people sell. The second is actually it's some people's entire business model. Instead of fix and flip, they'll do a couple extra steps and they'll furnish it and fill it, and then they could sell it at even a higher premium because now they're selling this stabilized, occupied asset,
Mm,
and it's typically above market price.
that's good.
So, yeah, those are the top two. Jack, let's say we found the deal, we like the underwriting, ad split rep gives the green light. What do we do next to get some capital for this down payment? Like what, in your opinion, is like the surefire best route?
Yeah. So now you're asking kind of like everything's ready. You have the deal. Well, let me ask this: if you have a deal, like how quick do you generally need to move on it from your perspective?
So we would ideally do it in this order. You link with a TC, a transaction coordinator. He's going to look at documents with you, he or she. You're going to need to put EMD down, which is probably going to be 3 to 5K on most properties, if not more, depending on the market you're in. So that's the first major expense, depending if someone has that or not, is having access to, let's call it 5 grand. And so for anyone listening, the EMD, it's just to officially, and you're saying to the agent or the seller, hey, I want to buy this, sign a contract, and then you put earnest money deposit down and you're opening escrow. And then typically you're going to have like a 10-day inspection period to really dive in. And ideally, you are paying for an inspection anywhere from 500 to $1,000 during this 10-day window. So we need like 5, 6 grand to hit these next points.
And then very soon after that, a week, 2 weeks after that, or is it 30 days? Then you need the rest or the down payment.
Yeah, we call it, let's call it 35 days. Yeah.
Okay. So what you wouldn't want to do exactly is not have any access to capital. Then you're putting the EMD, the deposit down, and then you're going through closing, and then like, all right, you need the capital, and kind of in that 30 days, like, all right, let me go apply for all these credit cards or business lines of credit, whatever it is, and then I'm fully banking on all these approvals to be able to afford the down payment. And then if for any reason you fall short of what you need, then you're in a sticky spot, and then you could potentially lose your deposit. So, but also we're playing with, the 12 to 18 months of 0%. So it's not like you want to get that as soon as possible and then get the deal 6 months down the line and then you have less 0%, right? So there's
Mhm.
that balance of getting the capital, I think, before you're making any deposit on a deal, and then that's going to take 30 days to then put the down payment down. But I think you want to do as much research on deals as possible, really underwrite several deals to just get in the rhythm of things, and then get access to the capital. Go through the business credit applications, assuming all those other steps that we talked about are complete. Getting access to the capital to know what you're working with. Say you get approved for, you can get approved for $200,000 if you do it right, in the first go on a business funding round in 30 days. Not everyone gets 200 grand. Sometimes people get 50,000. Sometimes people get 80, 90, 100,000. So I think it's important to get access to the capital first, see what you're working with, and then understanding what kind of a deal you can get into based on the capital you now have access to. But then right when you get approved for everything, you pretty much want to move as soon, as quick as practical, because you have that 12 to 18 month 0% clock that's already ticking. So at that point, it's, applying for these business credit card accounts, going into the Chase branch, applying for their two business credit cards, the Business Inc. Cash and the Business Inc. Plus, going into the Wells Fargo branch, applying for their business credit card. They have one, but if you have two business entities, you can actually get two of the Wells Fargo cards. American Express, potentially Truist, Bank of America, if you've had a good relationship with them. So it's getting access to the capital, and then soon after, then it's, as soon as practical, get into a deal.
Cool. So let's see. I'm going to show this first house again that we were looking at. So this is the one that it is meeting the 2% rule, and let's dive into some numbers.
Yeah, cool. Perfect. I was going to ask. That's great.
So all that we talk to DSCR people all the time, and they'll tell you they can do like a 75% LTV, which just means it's the loan to value. So that means you need to put 25% down. In our opinion, we just assume, call us cynics, but we're going to have to do like 40% down, whether the appraisal comes in weird, the DSCR ratio. In short, we just assume 40% down. And then if it's not, it's just a bonus. So on this, it's a little over 100 grand. Now, let's see, on this part here, I want to show the cash flow, the projected cash flow for this property. Anything can happen, but based on how it's been running for 12 months, accounting for all those things above, vacancy, reserves, water, electric, this one and a lot of other solid deals that we see on average are cash flowing $1,500 a month. So Jack, if we had to liquidate, let's say 120 grand, that way we have some reserves, or even 125 grand, what is the rule? Like how much needs to be paid, at least with credit cards, on a monthly basis? Like is it 1%, 2% of the balance, or what have you seen?
Yeah, great question. I was actually going to mention that. So if you have a balance on a business credit card, most times you need to pay 1% of the balance.
Mhm.
Sometimes it's 2% of the balance. It's most are 1% though. So say, for example, you have a $50,000 business credit card at Chase with a full balance. You'd have to pay 1% of that balance each month, which would be $500.
Okay. Like on this, we have to liquidate, call it 110 to buy this closing costs, and then ideally you have some reserves,
Mm-hmm.
contingencies, at least liquid. Let's call it like 125 grand, 130. That means 1%, that's $1,300 a month that has to go towards the credit card, correct?
Mm-hmm.
Is paying down the debt. Okay. So that brings me to my next question. So I'm going to bring the calculator back up. On this, the one that's following the 2% rule, now we can see it is kind of tight. So I want to highlight something that this isn't like a get rich strategy by any means, but a long-term wealth building plan for anyone that does this. So basically, all your cash flow every month is going towards paying the business credit card off. So it's super important to highlight, like this isn't money that's going into your pocket. Like you are aggressively paying that business credit down.
Hmm.
So Jack, when whenever someone does the cards, these are some of the more like intermediate questions I have. Let's say we bought this, we closed, cash flowing, all right. So Jack, let's say we like the property a lot. We're gonna buy it. We're taking all the cash flow, paying down the business credit, which we know is pretty close. That 1,500 cash flow versus the 1,300 that we need to pay towards the credit cards. In your opinion, what is the best way? We need 5 years to do this, to pull this off. We'll aggressively be paying down the principal on the business credit cards, but also at some point we'll be able to refinance, but not banking on the refinance. Like, what would you do? Is it multiple balance transfers? Is it business lines of credit? Is it multiple LLCs, blend, or what do you think?
Yeah, Dustin, this is a super good and very important question. So, in the case you needed, 5 to 7 years to really, be safe on paying off the card based on the cash flow of the property, I wouldn't specifically go out and get $100,000 or more in business credit on business credit cards to put into the deal. I would get a little bit less, and the reason is it's because if you get, say, for example, $50 or $70,000 on your first round of funding, use that in the deal. Then fast forward in 12 to 18 months when you need some more capital, then you can do a second round of funding and most likely get another 50 to 70,000 to give yourself another year of runway. But if you max everything out, like if you get max funding on all the different banks on the first go around, it becomes more difficult to get that same amount on the second go around. So that's one aspect there. To increase the chance of getting more funding down the line, I do strongly agree about having several different entities, different LLCs, like two, potentially three LLCs. Anything over two or three, it's kind of excessive at that point. But having two LLCs is much stronger than only having one. So I think that's really important. And then another quite advanced and ninja strategy to get 0% for several years. I'll try to explain this as simple as possible. So if you have, well, let me mention this. There's some banks that allow you to move available credit from one business credit card to a different business credit card at the same bank. Okay, so I'm going to give you a very clear example. We have a Chase $50,000 business credit card. We use that $50,000 for whatever deal, and we get to the end of that 12 months and we need to pay that $50,000 down because we don't want to start paying interest on that card. Well, if you also have a $50,000 business line of credit at a different bank, like KeyBank or Wells Fargo or Truist, those are really good ones to get, then you can use that $50,000 business line of credit. You pull from it, so you have the cash in the bank account now. Then you can pay off that $50,000 Chase card. So now that Chase card is down to zero. You can apply for a second Chase card, a brand new one, and say, for example, you get a $20,000 limit. The first one was a 50 at Chase. Now you just got a 20. And hopefully you get another 50, but we're just going to call it 20. Now at Chase, and not all banks let you do this, but you can move the available credit of that $50,000 Chase card over to the new $20,000 Chase card. So now you have $70,000, a $70,000 limit on a brand new Chase card that's 0% for 12 months. But now you might be thinking, well, that balance is on the business line of credit because I used it to pay off the first Chase card. Okay. So now what we would do is liquidate $50,000 of that brand new Chase business credit card, which you can liquidate for a 3 to 6% fee, basically converting that credit into cash that is now in your bank account. And to be clear, it's not a cash advance, it's a different strategy to turn the credit into cash. But now we have that 50 grand in the bank account because we just liquidated it. And now we use that $50,000 to pay off the business line of credit, which effectively put the balance on that brand new 0% chase card. So then say, for example, you then go another 12 months and you're still working, paying that down. You can use that same business line of credit at a different bank to pay down the chase card again. Okay. And then you're going to apply for another chase card. You're going to move the available credit over, liquidate it, and then pay off the business line of credit. So with the business line of credit, through that exact strategy, you can get 0% interest for years. It's a more advanced strategy, but it is a
Is there
very savage strategy on how
a,
to get 0% for several years. And again, I wouldn't specifically try to bank on getting 0% for years on like $100,000. I would go for maybe like 50 to 70. Okay. And then also like another concept is, and I'm not exactly recommending this, but just something I did. So bonus depreciation was also valid for Bitcoin mining machines. So in 2024, I bought $50,000 of Bitcoin mining machines, and I got a nice tax deduction. In 2024, it was only 60%, but still a nice tax deduction. At that point, I put that $50,000 transaction on a 0% business credit card for 12 months. Now, the mining proceeds from that purchase doesn't make enough money to pay off the card in 12 months in full. However, I was confident enough in my future cash flow through the year to use my future cash flow to pay off that balance throughout the year, and that's coming to an end here soon. It's gonna be paid off. So in that scenario, I got the Bitcoin mining machines. I got the tax deduction. It's been mining Bitcoin, which of course has been going quite well up in value, and I've been using my active income to pay that card off. And that strategy is a little bit more risky because what if my active income stops? And then how am I going to pay off the card? The Bitcoin mining proceeds are coming in. I can use some of those to pay it off, et cetera. But to some degree, you can look at your future, what your income looks like and bank on using your active income to pay off the card. Also, again, carries a little bit more risk, but it's been working out for me in that exact scenario.
cool? I want to, the audio is going in and out, so I just want to recap it in my own words and let me know if I heard it correctly. Main takeaway is ideally you yourself are not maxing out. Like in order to buy the property, you need 120-ish. But ideally, though, you're saying it's not you doing that full 20. It's either you had cash that you can bring to it and you're supplementing with business credit, or maybe a spouse in you or a business partner in you. Obviously, you need to trust them a lot. But ideally, you're saying don't personally one person max out that because it's going to be hard to balance transfer. And then the second part I heard that also connected to the Bitcoin mining was you could use a business line of credit to temporarily pay down the first round of credit that you applied for. Use from a different bank a business line of credit, temporarily pay it down, open up new cards, and then transfer some of that limit over to the new card. Now you have a much larger portion. And it sounds like that's what you did with the Bitcoin mining to a degree is you bought it, the mining machine, got the tax benefits, and then you're transferring in addition to paying it down with the cash flow and your active income. Is that everything? Did I
Correct.
miss something?
Correct. Yeah. And
Okay,
another thing
cool.
is, having multiple LLCs can benefit you on getting access to more capital. If you have a spouse or a partner, it also helps with getting additional capital. So yeah, I think getting $50,000 to $70,000 approved for something like this, I think that's probably the sweet spot. You don't want to over leverage yourself right from the beginning, but
No,
50 to 70,000, I think is probably a safer bet than starting with like 150,000 and then banking on, okay, in a year,
no.
I'm going to need to get more, $150,000 more to get, more 0%. So I think 50 to 70 would be a safer position.
Awesome. Well, there you have it, guys. Again, this is not advice. This is just an idea, a concept. I want to talk through it with Jack here. I've talked about it with Pace Morby, and I wanted to merge these two worlds together. Definitely do your own due diligence, have multiple safety nets, multiple backup plans. Just assume things are going to happen, and you at least have some idea of how to tackle those. So, Jack, before we jump off, is there anything that you feel you want to conclude with that we may have glossed over that you want to make sure the audience knows about business credit when it's combined with real estate?
Yeah, I think getting access to capital is one of the most important skills as an entrepreneur or investor. And I've just found the easiest way to get access to capital is through business credit cards and business lines of credit. And I think with something like credit and also like tax strategy, it's not just a one-time thing. It's a skill you want to develop as an entrepreneur or investor over many years of your journey. You know, tax strategy is not just about this year, but you're going to be working on it hopefully over the next 10 years or maybe the rest of your life. I think the same principles apply with credit and getting access to capital. For me and the many people that I've worked with, it's done absolutely amazing things with their real estate business or their other online business, etc. So I think learning about credit and becoming an expert about credit is just a very good skill to have. And if you guys want to dive deeper on anything with credit related things, my YouTube channel, I have a bunch of different podcast interviews posted there. Jack McColl is my name. You can find me there. My Instagram is Jack McColl. And then scalewithfunding.com is our done for you funding service where we help entrepreneurs get access to this capital on a done for you approach. And I'm sure, Dustin, you can drop that link below if anyone wants to get access to funding. We have a very good done for you funding approach to help people get that $50,000 to $100,000 approved.
Awesome. Thanks for joining, man. All right, guys, in the description, we're going to have all these resources below. I have bought properties like this myself, and yeah, check it out. Hit me up with questions. Thanks, guys.